Hey everyone, welcome back to my channel. My name's Jen. I'm a CPA qualified accountant here in New Zealand and I make YouTube videos about money, business and investing. If you're thinking about starting a business here in New Zealand, then you're going to want to keep watching this video as I'm going to give you 6 tips to help your business get off to a great start. One of the first things that you need to think about is how you're going to structure the business. So are you going to set up as a limited company, a partnership, or a sole trader? Now, each one of these has different tax implications, and you are better doing your research before you start than having to change later down the track. There are a number of handy guides online that run through the benefits of each one of these. So I will link to a couple below and you can have a read through those. Otherwise, if you don't feel comfortable making that decision yourself, or you don't know how to go about maybe setting up a limited company, then please do contact an accountant and they can help you with all of that. The second thing that I'd encourage you to do is to set up a separate bank account. So you want to keep all your business expenses separate from your personal. And then later down the track, when you need to complete a tax return, it is a lot easier to figure out what your revenue and what your expenses were if it's all separated into a different bank account. At the minute, there are a number of banks doing good deals on business bank accounts. So they're offering free fees and I think reduced interest rates for new company startups. The third thing you need to think about is whether you need to register for GST. So here in New Zealand, the threshold is $60,000. So if you have a business that earns over $60,000 in revenue over a 12-month period, then you are required by the IRD to register for GST and to charge GST on all your products and services. Alternatively, if you earn under $60,000, you can voluntarily register for GST, which allows you to claim GST on your business expenses, as long as you obviously charge it on your products and services. The next thing to think about is how are you going to keep track of your sales and your expenses so that you know how much money that you're earning. If you're only making a few sales and you've only got a few expenses and your budget is a tight one, then you can set up an Excel spreadsheet to track these quite easily. Download your monthly statement from your bank account and then just keep track on a monthly basis what your sales are and what your expenses are. But this will become quite time consuming and fiddly if you have got quite a few sales and quite a few expenses. It definitely is worthwhile investing in software like Xero or MYOB to track your sales and your expenses if you've got more than, say, 20 transactions a month. You do need to keep a copy of your invoices and your receipts so that if IRD or if your accountant asks for them, that you can produce a copy. You don't need to keep a paper copy of these. The easiest way that I find is to take a photo of them with your mobile phone, and both Xero and MYOB have the ability so you can email them through to the software and it appears on there for you to match against the bank account, and a copy is stored on their server. So later down the track, if you need a copy of them, they're right there. The fifth thing that you should be doing is doing a business plan. Now, it doesn't need to be overly complex or professional, especially if you're not borrowing money from the bank and therefore the bank aren't requiring a copy of your business plan. If you're self-financing the business, you definitely still want to do a business plan. So this just covers off who your ideal customers are, where you're going to find them, how you're going to market to them, what your budget is, like how much, if you're selling a product, how much is it costing you? How much are you selling it for? What is your profit margin per product? How many products you need to sell to break even? Come up with a plan and then you can track your performance against your plan just to see how you're going each month. The sixth thing to think about is insurance. It is really important, no matter what product or service that you're providing, is that you have insurance. You should have public liability insurance so that if For example, you damage someone's property, you know, if you're water blasting a house, then you need to make sure you've got cover if you damage it. If you're providing accountancy services and you mess it up, you're going to need professional indemnity insurance. If you're employing employees, you're going to need employee insurance. There's various different types of insurances that will cover you in the event that things go wrong. So it is really important that you do get insurance. Thanks for watching this video. I hope you found it useful. If you are thinking about starting up your own business here in New Zealand, I'd love to hear from you in the comments. Tell me what business you're thinking of starting, or if you've already started one, let me know how it's going. And I'll see you in my next video. See you guys. Bye.